We're at REIT Week 2010 in Chicago, and I'm joined by David Simon, Chairman and CEO of Simon Property Group. David, what's your overall view on fundamentals right now?
I'd say clearly the retail fundamentals are moving in the right direction. They're certainly better than last year.
And what is the metric that you look at most closely in terms of gauging where the sector's headed?
The thing I'm most focused on is I want to see cash flow growth out of our properties. So, you know, there's a lot that goes into that. You know, marketing, sponsorship opportunities, sales, retail occupancy, and the like. But you know, I'm a cash flow guy. So at the end of the day, I want to see the cash flow grow from our existing properties.
And speaking of your properties, how do you compare the performance you're seeing in your U.S. operations versus operations in Europe or Asia?
Yeah. You know, we've been fortunate that just our Asian operations dedicated to the outlet business has been very strong. Japan, Korea. We're actually got a new development in Korea about to start in the outlet business, one in Malaysia, and a couple more in Japan. That business, you know, has been very strong, and even with all the turmoil in Europe that's occurred, our properties there are strong as well. So, you know, everything is you know, there's nothing dramatic happen in any of these markets, but they're all holding pretty well together. And you know, clearly the U.S. was most affected than our other properties. And again, that's the bulk of our business. But so it's good to see the U.S. coming back in the direction that it is.
And looking at driving growth, do you expect more to come from the acquisition side or development activity?
I think new development will continue to be challenged other than in the outlet, certainly in the U.S., other than the outlet business where there's a number of new development opportunities being pursued, not just by us, but by you know, many players in the business. So I think naturally the way we've grown most dramatically is through acquisitions. And you know, that should happen. I mean, it comes in fits and starts, and it's hard to exactly model when it does, and you got to be patient and wait for the right opportunity. But we'd expect growth to come from that area.
And speaking of patience, there was obviously a long road you're involved with GGP.
Right.
Now, do you expect to take that capital that you had available for that deal and look for a similar large type deal or possibly several smaller ones?
You can't rule anything out. In the meantime, you know, we're going to stick to what we've done well over the years, and that's just make our properties better, focus on cash flow growth. You know, we'll use any excess capital that we have to pay down debt. And you know, there's, you know, we'll look for opportunities, and there'll be some out there, and you know, you just have to be patient. You can't just run to do a deal just to do a deal.
Is there anything from this last downturn that you learned or may change the way that you run Simon Property?
You know, I just think you have to plan. You have to have a contingency plan that plans for the worst, and you can't get over your skis, so to speak, on your business plan for. You know, because I think the world is so uncertain.
Great. David, thank you very much for
Thanks.
your time. For REIT.com, I'm Matt Bishar.